It's your boy PB, back with another PhatBear Alpha episode, coming at you this fine Saturday. Let's kick it off with the Big Daddy, Bitcoin, lounging around 94K in the weekend. Bitcoin is taking it slow after a massive move last week from 85K. Moving on to the total crypto market cap, which is chilling at 2.95 trillion, basically unchanged from yesterday. The 24-hour volume's at 92.6 billion, down 5.4% from yesterday. Bitcoin's dominance is sitting at 63.4%, hogging nearly two-thirds of the total market cap, like a greedy dragon on a gold pile. The fear and greed index is at a neutral 53, screaming indecision on whether to break out or break down. For alt performance, the winners are Trump, Bonk, Virtuous Protocol, and Alpaca Finance. The losers are Init Tia, Pudgy Penguins, Ardor, and Zora. Now, we're diving into some spicy macro news straight from the IMF. The International Monetary Fund's Policy Committee dropped a hot take at their spring meetings in Washington, and it's gloomier than a Bitcoin bear market. The IMF saying rising trade tensions are like kryptonite to global growth, fueling uncertainty and jacking up risks to markets and financial stability. They're pointing fingers at, you guessed it, U.S. tariffs, which are hitting 100-year highs, thanks to a certain someone's love for trade wars. The IMF slashed its 2025 global growth forecast to a measly 2.8%, down 0.5% from January, and they're not exactly popping champagne about it. The IMF's not just worried about growth, they're freaking out about market volatility. These trade spats are sending stocks on a roller coaster wilder than Dogecoin's 2021 pump. Global markets tanked earlier this month when Trump announced his Liberation Day tariffs, wiping trillions off the biggest companies. The FTSE 100 in London had its worst day in over 2 years, and analysts are screaming about a potential U.S. recession. Meanwhile, the IMF's warning that banks would get clobbered, having to stash more cash for losses or watch their trade finance revenue dry up. We just waded through some macro muck. Next, let's zoom into the crypto streets, where the scams are as shiny as a freshly minted meme coin. Let's talk about Dubai, the land of skyscrapers, supercars, and apparently super shady crypto scams. Dubai's Virtual Assets Regulatory Authority, VARA, and the Dubai Land Department, DLD, just dropped a public warning about fraudsters peddling fake tokenized property offerings. These scammers are out here pretending to be part of Dubai's legit real estate tokenization pilot, which launched on March 19th, to digitize property title deeds on the blockchain. Sounds sexy, right? Fractional ownership of Dubai's glitzy properties? Sign me up. Except, these con artists are selling nothing but hot air and broken dreams. The real deal, for those curious, is a collaboration between the DLD, VARA, and the Dubai Future Foundation, aiming to make high-value property investment accessible to smaller players. Think fractional ownership of a Burj Khalifa penthouse without needing a sheik's bank account. But these fraudsters, they're out here forging credentials, slapping blockchain on their pitch decks, and laughing all the way to their offshore accounts. VAR is urging investors to check their official register before throwing money at any tokenized real estate deal. Pro tip: if the website's got more typos and a shitcoin white paper, maybe don't YOLO your life savings. Next story. The U.S. Securities and Exchange Commission just dropped the hammer on Ramal Palafox, the mastermind behind PGI Global, a so-called AI-powered crypto trading platform that turned out to be a $198 million Ponzi scheme. According to Bitcoin.com, the SEC charged Palafox on April 22nd for swindling 90,000 investors worldwide between 2020 and 2021. This guy promised daily returns of 0.5 to 3% through Bitcoin and Forex trading, powered by some magical AI auto trader. Spoiler alert, the only thing automated was a transfer of investor cash into Palafox's luxury car collection. Here's the scam in a nutshell. Palafox used a multi-level marketing model. Think crypto's version of your aunt's essential oil side hustle to lure in suckers with fake dashboards showing juicy profits. In reality, most of the money never touched Bitcoin or Forex markets. Instead, Palafox siphoned off $57 million for himself, splurging on Lambos, Rolexes, and luxury homes, while recycling the rest to pay returns to earlier investors. Gotta admit, it's nice to see the regulators catch a scammer. Usually they're too busy chasing legit projects to notice the actual grifters. Last crypto story. Coinbase Chief Information Security Officer, Philip Martin, is out here trying to save your bags from the scammers. He says a key to not losing your life savings to a Telegram scammer is knowing how these scams work. Crypto is like the Wild West, except instead of 6-shooters, you've got phishing links and deepfake videos. He's pushing for users to learn the basics. Don't click sketchy links. Don't share your seed phrase. And for the love of Satoshi, don't fall for free crypto giveaways on X. Martin also flexed Coinbase anti-scam playbook. They've got a beefy compliance program with know your customer checks, sanction screenings, and enough law enforcement partnerships to make a scammer rethink their life choices. Only 0.34% of blockchain transactions are illicit per Coinbase, but that's still enough to ruin your day if you're not careful. They're also rolling out tech to spot scams before they hit, like flagging suspicious wallet addresses. But let's be real. No amount of tech can save you if you're transferring ETH to a Coinbase support Gmail address. Up next, let's pivot from crypto's wild west of the DeFi frontier, where the promises are shinier, but the rug pulls are just as savage. Alright, D-Gens, hold on to your MetaMasks, because defi.app is dropping Onchain Perps. They're launching Perps trading powered by Hyperliquid, the DeFi Perps engine that's processed over $2 trillion in volume. If you're not familiar, Hyperliquid's a top dog in decentralized perps, with $3 to $4 billion in daily trading volume and 70% market share. It's like the Binance of DeFi, but without the KYC nightmares and custodial baggage. DeFi.app pitching this as the ultimate mashup. Exchange speed, DeFi freedom, and a UX that doesn't make you want to eat your laptop. Now here's where it gets spicy. Rewards. Every trade earns you D-Gen Arena XP and potential Hyperliquid points, doubling your airdrop farming potential. Side note, Hyperliquid hasn't confirmed Season 2 points, so don't get too horny for those airdrops yet, if you get liquidated. Because let's be real, leverage is a cruel mistress. DeFi.app matches your loss 100% in D-Gen Arena XP, with a 1-to-1 USDC to points ratio. So you blow up your account, but at least you're stacking XP like a pro. It's like getting a participation trophy for Rec City. They're also promising a unified portfolio view for Spot and Perps, so you can track your wins and losses in one place without juggling a dozen browser tabs. Next story. Let's talk about Mitosis and their Matrix Straddle Vault, which sounds like a sci-fi flick, but is actually a DeFi campaign that's been making waves. Phase 4, the final chapter before Mitosis' TG, is dropping on April 29th at 4 p.m. UTC, and it's open to everyone, no caps, no eligibility nonsense, just pure, unfiltered access to Theo Network's Delta Neutral Yield Party. It's the last chance to stack rewards before Mitosis goes full mainnet, and Theo's tokens hit the market. Phase 4 is a public free-for-all, unlike the earlier phases that gated access to other groups of the project. The campaign's been running since March, and Mitosis says it's designed to democratize institutional grade strategies. Think whale-level yields without needing a 7-figure wallet. You deposit, earn Straddle yields, Theo token, and Mito points, with boosts like 0.5% extra from using OKX wallet. But here's the rub. Withdraw early, and you forfeit up to 20% of your rewards, which get redistributed to the hodlers. It's like a loyalty program for liquidity providers, punishing the mercenaries and rewarding the faithful. Last DeFi story. Skatechain, the folks building a universal application layer to make apps run across thousands of chains. Their skate park ecosystem rewards users with ollies for engaging with cross-chain apps, but the real buzz is their Yapper leaderboard, where community shillers, advocates, earn Skate tokens for hyping the project on X. Skate's allocated 1% of their token supply to these Yappers over 6 months, with 0.167% distributed monthly to the top 50. But surprise, they just tweaked the algorithm, and it's stirring up more drama than a missed airdrop snapshot. Skate's new algo is all about loyalty and cracking down on leaderboard farmers. They're penalizing users who moonlight across multiple projects' leaderboards, like those hustle bros spamming every crypto hashtag. The goal? Reward legit Skate community members, not just mercenaries chasing every airdrop in sight. This shift's already shaking up ranks, and Skate's betting it'll spark organic engagement. Organic, huh? I've been in crypto long enough to know organic usually means we're tired of bots gaming our system. Still, rewarding loyalty is a smart play. Nothing says community like punishing the disloyal, right? Lastly, we're moving from DeFi community cheerleading to the airdrop arena with Sophon. What's Sophon even about? It's an entertainment-focused L1 chain with ZK roll-up tech, backed by $10 million from Paper Ventures and Maven 11. Sophon has unleashed a $150,000 reward pool for their Yapper leaderboard on Kaido. Their Kaido campaign's a 3-month gauntlet split into 3 one-month seasons, each doling out a slice of that sweet $150,000 pie. It's not just about spamming hashtag Sophon, their algorithms sniffing out influence, value, and meaningful connections, which sounds like a TED Talk for airdrop farmers. Sophon's been watching since their Kaido leaderboard launched, using AI to map who's a true believer versus who's just gaming the system. Tweet profound stuff about their blockchain, get likes, and climb the leaderboard. The top 50 yappers each season split the rewards, with higher ranks grabbing bigger bags. Phase 3 is coming in May, following the same playbook, giving you fresh shots to prove your loyalty or get drowned out by the pros. Stay sharp, yap smart, and don't bet your rent on those tokens mooning. This is PB, signing off.